Is the historic run in memory chips just getting started, or is it a sign of a bubble about to burst? Micron Technology has been at the epicenter of a massive rally fueled by an insatiable demand for artificial intelligence. The company's financial outlook has been reset to levels previously thought unimaginable, with key products sold out for years to come. Yet, after surging more than 300% in the last year, the stock is showing signs of volatility. This week, we're asking, what does the intense tug-of-war between record-breaking demand and valuation concerns mean for Micron's future? Introduction. Welcome to TickerWatch News from Micron Technology, Week 8, 2026. This is your weekly briefing on the news and developments impacting the company. We're digging into the reports to understand the forces shaping one of the market's most watched stocks. Stock Snapshot. It was a volatile week for Micron's stock, which comes after a period of incredible growth. Over the past month, shares have gained about 5%, strongly outperforming the S&P 500, which saw a slight decline of less than 1%. The broader integrated systems industry actually lost ground over the same period. This past week saw the stock trade in a wide range. After touching a record high of over $455 in late January, the stock closed on February 18th at just under $400. This movement reflects a battle between investors taking profits after a massive run-up and others buying in, encouraged by the company's powerful position in the AI boom. The stock is one of the most searched for on financial websites, indicating high investor interest in trading activity. The takeaway is that while the stock's momentum is undeniable, valuation concerns are creating significant week-to-week volatility. Top news and headlines. This week, 4 key themes dominated the news around Micron. First, and most significantly, is the ongoing memory supercycle driven by AI. The demand for high-bandwidth memory, or HBM, is so intense that Micron has reportedly sold out its entire supply for both 2025 and 2026. This extreme demand is translating into incredible financial projections. Following a strong first quarter, where revenue jumped 57% year-over-year, the company guided for second quarter revenue of around $18.7 billion, with a gross margin projected to hit an astonishing 68%. This isn't typical cyclical behavior. It's a signal of extreme pricing power driven by the AI infrastructure build-out. The second major story centers on HBM production in the competitive landscape. At an investor conference this week, Micron's CFO clarified what they called inaccurate reporting, stating that high-volume production of its next-generation HBM4 memory has begun, with customer shipments ramping up a full quarter ahead of schedule. This news helped boost the stock as it counters concerns that Micron was falling behind rivals. However, the competition remains fierce. Reports also surfaced that Samsung is beginning mass production of its own HBM4 chips for NVIDIA's next-generation Vera Rubin AI accelerators, highlighting the intense race to supply the industry's most important players. Third, Micron is making massive long-term bets on future demand. The company is in the process of committing roughly $200 billion over the coming decades to expand its manufacturing capacity. Major projects are underway in Idaho, New York, and Japan, with a new $24 billion advanced wafer fab just starting construction in Singapore. While these investments are necessary to capture the projected growth in AI, they also carry long-term risk as they commit massive capital based on demand forecasts that stretch years into the future. Finally, the ecosystem around Micron is also growing. Lam Research, a key supplier of chip-making equipment, opened a new office in Boise specifically to work more closely with Micron on research and development for advanced memory. This move underscores the deep partnership required to produce these complex leading-edge technologies. Market reaction and investor sentiment. The market's reaction has been overwhelmingly bullish, driven by a wave of analyst upgrades. In recent weeks, Morgan Stanley and UBS both raised their price targets to $450. Deutsche Bank went even further, lifting its target to $500. Mizuho and Phillips Securities also set targets of $480 and $500 respectively. Analysts cite the severe memory shortage and unprecedented pricing power as reasons for their optimism. This bullishness is shared by some of Wall Street's most prominent institutional investors. Recent fillings show that David Tepper's Appaloosa management more than doubled its stake in Micron, making it one of the fund's largest positions. Jim Simon's Renaissance Technologies also made a significant addition of over $500 million, while Ray Dalio's Bridgewater established a large new position. However, the sentiment isn't universally positive. While retail investor buzz on social media is reportedly very bullish, some valuation models suggest the stock has run too far, too fast. One narrative pegs the company's fair value closer to $300, significantly below its recent trading price. This highlights the central debate, whether Micron's explosive earnings growth justifies its rapid share price appreciation. Technical and fundamental check-in. From a technical standpoint, Micron's stock chart shows a market in consolidation after a parabolic rise. Analysts note a potential support level in the $375 to $380 range. Some indicators suggest underlying market strength, which could mean the recent highs will be tested again. On the other hand, some technical analysts have pointed out that the stock is historically stretched, trading far above its 200-day moving average, which could indicate a pullback is due. Fundamentally, the picture is complex. The growth story is powered by AI demand and pricing power that is boosting earnings estimates at a staggering rate. Fiscal 2026 earnings per share are now expected to be over 300% higher than the previous year. Based on these forward earnings projections, the stock trades at a multiple of around 12, which appears quite low for a company with such a dramatic growth profile. However, other metrics, like the price-to-book ratio, suggest the stock is trading at a premium compared to its historical averages, which fuels the bear case that the stock is overvalued if the memory cycle eventually turns. The core risk remains the industry's historical boom and bust nature. What to watch next week? Looking ahead, the most important near-term catalyst will be NVIDIA's earnings report, scheduled for February 25th. That report will serve as a critical barometer for the health of the entire AI sector and will provide major clues about future memory demand. Micron itself is expected to report earnings in mid to late March. For the stock, key levels to monitor will be the recent record high of around $455 as a potential resistance point and the $375 to $380 area as a zone of support. The bull case is that NVIDIA posts blowout results, confirming that the AI spending spree is not slowing down. This would likely send Micron shares breaking out toward the higher end of analyst price targets. The bear case would be any sign of deceleration in NVIDIA's guidance, which could cause investors to focus on valuation risks and potential oversupply in the future, possibly pushing the stock below its recent support levels. For now, the most likely base case is continued volatility as the market digests the massive gains and awaits more data. Outro. Thank you for tuning in to TickerWatch. This podcast is for educational purposes only and does not constitute financial advice. Always conduct your own research before making any investment decisions. We encourage you to subscribe, leave a review, and share this episode.